Let me welcome on board now C. Vijayakumar, the CEO and Managing Director, and Shiv Walia, the Chief Financial Officer at HCL Technologies, to talk about how their quarterly performance has been. Gentlemen, great to have you both. CVK, if I could start off with you, good show on the second quarter, but can we expect this kind of momentum to stay put and continue?
I mean, as you can see, we've delivered good growth across the board, and the business momentum is starting to pick up. I mean, of course, we are hopeful that the momentum will continue, but definitely from guidance and things like that, we are being cognizant of the fact that there is, of course, macro issues and geopolitical environment and some client-specific issues. All of them could have certain impact. But generally, the discretionary spend is picking up beyond financial services as well, because financial services we had called out a couple of months ago. Now, tech and services, life sciences, retail, CPG, all of them had a good mix of both discretionary and non-discretionary spend related ramp-ups in the last quarter.
So CVK, so far wouldn't be fair off the mark if we say that the guidance is conservative and you are likely to be at the top end of the guidance comfortably?
Our guidance is 3.5% to 5%. That's what we are overall comfortable with.
So what is expected in terms of wage hike on margins in Q3? What levers would you have from here on margin expansion?
This wage hike is, is a planned wage hike, so I don't expect any further, impact. It's already part of the forecast we have, and we are comfortable with 18 to 19% margin guidance we have given.
And Shiv, what about the levers from here on? Tell us a little bit more as well about what the pricing environment is going to look like.
It's steady, I would say. Even the demand environment is also steady, as also the other lever, even the pricing also. As I don't expect any. It's picking up gradually. That's what I would say. And also the Q3 is a seasonally strong quarter for us because of the seasonality in software. So yes, other than that, I guess business as usual, I would say.
Right, Mr. Vijayakumar, mega deals seem to be now missing from the system. Throw some light on the nature of the deal wins that you've clocked.
See, I think our $2.2 billion wins that we had in September quarter had a good mix of large deals and small deals. Of course, there was no mega deal in that. We had several $100 million deals, but there was nothing of 250 or 500 million TCV kind of deals. And these deals are by nature a little bit lumpy. It might happen like last year in the September quarter, we had a very large deal. So that helped us get to $4 billion booking. So it would be lumpy in nature. We have several large deals in the pipeline, and they would play out depending on how the decisions happen over the next 2 to 3 quarters.
So CVK, how has been a pickup in the Gen AI projects for you?
Yeah, pretty much the entire pipeline that we are currently processing is got some Gen AI component in it. Every efficiency-led program, we have AI Force, which is our Gen AI service transformation platform. That's a part of it. Now, AI Foundry is helping in a lot of data-related innovations that clients are undertaking. And we see cognitive infrastructure kind of demand for both hyperscaler environments and private AI stacks. So these are the 3 broad areas where Gen AI is definitely creating a good momentum. Like modernization is one of the best use cases where using Gen AI, the speed of modernization and the cost of modernization could be much more much lower, and the speed is much faster. So I think these benefits are definitely acting as triggers for the decision makers to consider significant retirement of technical debt, which is what a lot of global companies constantly struggle with.
All right, and CVK, what's the highlight of this quarter? That's been the software business. So highlight for us, what is driving growth within this business?
So software business, we have laid out a 3-year strategic roadmap with multiple levers, which includes significant capability enhancements in the product. Like for the marketing automation, we have the customer data platform as a plugin. Similarly, for every product, we have certain new features which are being plugged in. And that's really one of the foundational aspects of the strategy. The second aspect is providing customers the choice of deployment. They could do it with a hyperscaler of their choice or in a private cloud stack. So I think that also gives a lot of flexibility. Then we have a number of features which provide licensing flexibility. And we have built a very good partner network. So all these foundational pieces are in place. And for all the renewals, we have a customer success play where there are teams which are exclusively focused on how can we enhance the usage of the product with different clients. So all of that is showing improvements. And the most important capability is that on the data side, we see Actian hybrid data platform as a very strong growth driver in the software business. So we've done well in the last quarter. We've done well in the first half of the year. However, we are currently at our expectation was low single digit, but we've already delivered almost 6% in the first half. We still think our aspiration is mid-single digits to be achieved in a consistent manner before we extrapolate anything further.
Right. So the other strong bit was also BFSI, right? Ex-state, the street was up about almost 4%. Would you call this as a sustainable benchmark?
See, there was no bunching up. I mean, it could be. I mean, of course, there were open demand, which we saw even end of June and early July. So that's what we had called out. North America financial services started earlier, largely around the insurance. Insurance is where we had the maximum pickup. But in Europe, across the board, the entire financial services segment did well. Same is true with the rest of the world, which is what we call as growth markets. So I think it's quite broad-based. And US, maybe it's a little bit more skewed towards insurance.
CVK, so you won't be worried about the slight inch up in attrition. Are you expecting it to move up further?
I think it would probably inch up a little bit with demand coming back. That's what we expect.
Okay, gentlemen, thank you so much for joining in and giving us an overview as to what the quarter gone by has been like, and more importantly, what the road ahead looks like.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.
Hyundai Motor India Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of Rs 1,865 to Rs 1,960 per equity share of face value of Rs 10 each. The anchor investor offer period opens and closes on Monday, October 14th, 2024. Offer opens on Tuesday, October 15th, 2024. Offer closes on Thursday, October 17th, 2024. For risk involved and other details, please refer to the red herring prospectus, which is available on the website of the company, SEBI, BRLMs and the stock exchanges.